You know what, folks? We're just going to go for it. I know it's a little bit late, but we got earnings this week to talk about. Here's the earnings preview for the week coming up. A little bit jerry-rigged here. I'm plugged in to the TV across the room now. Huge HDMI cable, thankfully. But we're looking from quite far away, so just keep that into consideration. I don't stop the content, okay? No monitor. The monitor's dead. But guess what? I'm figuring this out. We're going to find a way to bring you content. Let's just get right into it. Great week in terms of earnings here. A very diverse selection of companies reporting earnings with a lot of different industries. So definitely, I know plenty of people might be interested in some of these. A lot of Chinese stocks, retailers, financials, cloud. It's all here, baby. It's all here. I've got two focus stocks this week. I really think there should be more. Wednesday's a huge day if you haven't noticed, but we'll take a look. We're just going to go right into it. Starting Monday before open, talking about JD.com, an e-commerce play in China. And when we talk about e-commerce, what we've seen so far in terms of earnings is a very tough comparable for them during this period. We're talking about peak lockdown, so it's going to be very tough to grow year over year, just due to the fact that last year e-commerce sales as a whole just skyrocketed beyond belief. So keep that into consideration. You look at JD. It's going to be about guidance. And honestly, Wall Street's just looking at a percentage growth number, even though that's not how they should look at it. They should look at what it looks like over a 2-year standpoint, how that compares on an annualized growth rate standpoint. But they don't look at that right now, unfortunately. Very short-sighted. Which, by the way, speaking of short-sighted, I'm telling you, I posted about those tattooed chef call options. I'm just telling you, they paid off today. Ooh, baby. Someone's made some money. Iteran after them. Nothing else super crazy here. We have Vivo Power at the end there. After close, we've got Palo Alto. Pretty much your basic, your definition of the Silicon Valley company. We all know Palo Alto, okay? Great company. It's run very well. Company they do great things. So, great business there. Always an earnings I like to look at. Remark Holdings, another Chinese company. What can I say? And Quipt. That's fun. Tuesday, a little bit more interesting for me because I have some more insight here. So we've got Tuesday before open. Nice little Best Buy, right? Best Buy. This is going to be one facing a very tough comp too, because we talk about last year and spending on high dollar items was quite incredible. So consider that. Because it's tough. People were buying the heck out of TVs last year, and it's not going to necessarily end this year. But we see there was a lot of headwinds that helped them. We're talking about, or really tailwinds, I should say. You talk about stimulus checks. People were just buying up everything, and right now we see an issue with supply chain. Still somehow, and most places, just 100%, they're fulfilling warehouses way before they fulfill the retail stores. It's kind of hard to find mid-sized TVs right now in store. And again, I think e-commerce plays are fine. Sometimes, though, you get the TV and the people who've delivered it to you have literally smashed a hole in the middle of it. I don't know how they do it, but sometimes they do it. But it's hard to find mid-range TVs. We're talking about the 50, 55, 60, which are the best-selling of TVs. Let's just be clear. Those are the sizes people are looking for. So put that into consideration. It's just going to be a tough comp, but it's going to be about guidance for Best Buy, how they're able to push through that. Medtronic, great company there. Medtronic does great things, no doubt. Advanced Auto Parts, business as usual for them. Nothing's crazy there. City Trends, not a company I'm super familiar with, but sounds quite like a clothing brand. And if it is, I'll lump it in with the Nordstrom and Urban Outfitters, which we'll talk about in just a second. BMO Capital, main focus here is going to be on allocation of resources, where they've invested the money at. That's all people care about with these companies. We want to know where that money's invested at. Tell me your stakes. I got to know. Ribeye or T-bone, which one? So Then we have Scotia Bank following that. Scotia Bank, we're into the financials again. It's great stuff. So see what Canada's able to do. Yeah. Blue City. Okay, Blue City. I love Blue City. Somewhat formerly known as the favorite place of the Blue Man Group. They talk about Blue City in the song, I believe. You know the hit song. Where they, in fact, do not say, if I were green, I would die. It's abadee-dabadie. Come on now. They're just making noises. They're not saying, if I were green, I would die. Why green? If you were any other color, he'd die too. It doesn't need to be green. It doesn't make any sense if he said green. In fact, green's a lot closer to blue than many a different color. So, frankly, I don't. Have you seen the color wheel? I'm not buying it. I'm not buying the fake lyrics people are putting out there. After close, we have Intuit. Intuit's one that's very hard to tell right now, mostly just because of the fact that it's hard to pinpoint tax season right now, right? We had not really tax season last year because it got extended. This year also extended. So what kind of comparable are we looking at? Because people are, and I say that because Intuit's obviously number one product being TurboTax. It's hard to see when all of that's spread out now what that looks like for them in terms of a comparable. I don't know what that looks like. Nordstrom and Urban Outfitters, combining them together, this is a quarter in which clothing was at its absolute valley last year. We're talking about 40 to 50% decline in the entire retail industry of clothing. Clothing as a whole was just horrid during this part last year, mostly because a lot of these retailers in specific were closed. They were not essential retailers. They were forced to stay closed and could not operate business. But even on top of that, the ones that were forced to stay open, they still saw big declines. So it's going to be an easy comp beat for them. And based off what Wall Street's been doing lately, they're just going to say, well, they grew 50% even if they didn't. I don't know. In my opinion, I'm looking at what it looks like compared to the 2019 numbers. I'd like to see an increase. I think there are tailwinds that'll benefit them because of the lack of purchase last year. I think that'll benefit them this year because they'll be selling more. So hopefully they do post gain over 2019. That's kind of my focus here with these industries that were completely disrupted. Yeah. Toll Brothers, after them, make very high quality houses. We're talking, high six-digit houses. We're talking about 500,000 plus. These are expensive properties. Great houses. Housing market still on fire. Cost to build extremely high. Not sure what that means for them. Margin's going to be hurt. We'll take a look. ScanSource, Prospect Capital. I love me some Prospect Capital, man. Monthly dividend champions here. Beautiful stuff. Making me a lot of money every freaking month. Heiko, SmartVest, and Exponential. I see what they did there. They forgot the E. I mean, it's pretty cool and all. I think, a 5-year-old child could have probably thought about that. But Wednesday before open, we have Phallus Sporting Goods. So interesting to see what they're able to post up. I don't know what that looks like for them. We saw a lack of sports in the summer of last year for part of it. So keep that into consideration. What are comparables going to look like? I don't know, but I think it's going to be business as usual as far as Phallus Sporting Goods. Express, Royal Bank of Canada, Canadian Financials. Get out of here. What do you think you're doing? Kingsoft Cloud. Seems like, in my opinion, it's one of the dumber names I've heard in my life. Kingsoft Cloud. I mean, come on now. What is that? Who's naming this stuff? Children? They just put their name in an auto generator. It's on the freaking whenever you're creating your an account for something and you use a generated name. You're making your PS4 or PSN account and it gives you an auto suggested name like Burnt Toast or something. That's kind of what this sounds like. Kingsoft Cloud 3. It's logging on, boys. Shoe Carnival, based off what we saw from Foot Locker, again, it's going to be easy comparables. So what are they able to do that's better than 2019 is what my thing is. I've never been inside of a Shoe Carnival, though. I've never once considered in my life just going to a place that just sells shoes. It's a little weird to me. I don't know. It's a very specified business, and I don't know how it works in the modern era. Not something that's going to last long term, though. Let's be clear with each other. Viomi, Lexan. Look at these. And we have a big red P here. If you have red P, could you please see a doctor? They might want to see you. After close, though, we've got one of my focus stocks. It's going to be in Salesforce. What has Salesforce been doing? Worth mentioning over the last year since earnings here, they've been able to post up a decent gain of 25%, but in terms of the entire market, they're lagging somewhat. And this is a company that's kind of been on the forefront of business right now. You talk about e-commerce plays, Salesforce is right there. Cloud-based company, e-commerce play. This is the wet dream of Wall Street right now, and they kind of have been neglecting it. We've seen a lot of up and down movement. If you look at what they're expected for earnings, they're expected an EPS line of 92 cents. That compares to $1.44 of a year ago. Curious why the decline, but we'll take a look at that. I think it's something they should be able to beat. It's a high margin business for sure. And from a sales standpoint, they don't mention the year ago sales, but it was $5.15 billion. So keep that into consideration. They're expected $6.24 billion, which is around a 20 plus % growth there, all things considered. So right around 20% growth. Actually kind of a lower percentage. You see that's what they're expecting for the full year, but you'd expect almost a little bit more. But again, growth rates are slowing for this company simply because of the fact that we're getting a lot higher in terms of a revenue amount for this company. They're growing revenue quite rapidly, and as that grows, it's harder to grow in terms of percentage because you have to grow by even more dollar amount. So keep that in consideration. Growing by $2 billion when you're only making $5 billion in revenue is a lot higher percentage growth than when you're growing $2 billion when you're making $100 billion in revenue. So you have to keep that in consideration. Wall Street never does the law of large numbers. They don't understand it. They've really struggled in statistics. They didn't take it. Okay, they didn't really go through much education. The education system's failed Wall Street. Following Salesforce, I'm going to lump them together because why not? Great cloud. It's just a great cloud afternoon here. Snowflake, Splunk, Elastic, Snowflake, Splunk, and Elastic. Great companies. Great companies here. We're talking about essential data for sellers everywhere, right? This is great data that's used. Analytics are very important, so these companies doing great things. Then we have Ulta Beauty. Ulta Beauty's been doing actually really good numbers despite pandemic or not. Here they are saying we're just going to sell the crap out of stuff. We're expanding stores. We're doing great things. I'm going to be looking at store count growth. One thing I really want to look at for this company because I feel like they've been growing quite rapidly, but the company's doing good things. We have Autodesk then. My engineering buddies knows Autodesk. You love their suite of products. One time, I'm not going to lie to you, I made a 3D model of a vehicle in AutoCAD once. I mean, it's somewhat of a skilled effort. Not everyone can be quite as skilled as myself, but that's okay. Box. Williams-Sonoma. The logo looks eerily like Canopy Growth. I can't lie to you. It really does. Maybe that's where Canopy got the logo. Maybe I'm crazy. NetApp, maybe in crazy. What does that mean? Pure Storage as well. Thursday, before when we have XPeng, Abercrombie & Fitch lumping it in with the clothing, obviously. Dollar General and Dollar Tree. Personally, I'm a bigger fan of Dollar General, but these stores also had great numbers last year, so we're talking about comparables. It's going to be tough for them. You'd think, again, these high-dollar brands did really well last year because of stimulus check. Dollar stores also did really well, too, for those that were maybe struggling to get by. But I don't know how they were struggling to get by because the government was paying them $36,000 a year to sit on their butt. And that's just off of unemployment. So just imagine. Why would you need to go to a dollar store with that kind of cashish? But great stuff. I don't know what to expect out of these dollar stores. They did great last year. Crazy to see Dollar General. I prefer the logo. It's a nice new logo. It's just clean. Dollar Tree looks kind of like a child's design. They need a new logo. Coty. Yeah, Burlington, the Coat Factory. It's the Coat Factory, believe it or not. They have other products too. Momo, 1-800flowers.com. It's weird to have a uh, phone number as your URL. I don't know what. It's just they don't know. It's a very mixed message here. Are you going for phone calls or are you going for the website? I just don't know. It's just difficult for me. I don't like it. Sanderson Farms and TD Bank. Come on. Canada's financials are all over this week, baby. After closing with Peloton, another one of the focus stocks, and why? It's because of the performance of the stock over the last year. We're talking about 60% gains over the last year. What are they expected in terms of numbers? They're expected a negative 44-cent line compared to a positive 27-cent line. Curious why that might be. In terms of revenue, they're expecting nearly $1 billion, $921 million, which is a 50% growth year over year on the $600 million they posted prior. So if they're able to post that, really good for them. My concern obviously is going to be in terms of this EPS line. Again, it's a negative earner and it's not super exciting, but apparently they're supposed to be turning to profitability next year. We'll see what that looks like for them. The stock's still valued at a market cap right around $32 billion. If they bring $4 billion in revenue this year, it's more decent valuation for a stock that's fluctuated. We're talking about 52-week highs of 170 on the stock. It's at $100 right now, so keep that in consideration. Marvell Workday, it's a new HR service for a lot of companies, so they can really work on terminating all of their existing human resources associates. They can do it all from this. Personnel, gone. All for a much cheaper option in Workday. It's a contract. Much cheaper than a person. No health insurance with a contract. Get it? Gap. Who knew Gap was still around? But it is. And here it is. Again, we'll see what it looks like. HP, this is HPQ as opposed to HPE. They put up great numbers. You combine them here with Dell. Obviously, similar numbers expected because they grew PC sales very similarly last quarter. We'll see what it looks like for them, but I like them right now. I do. I like both those stocks. Lantronix, Ollie's General Store. It's actually something I've seen. Ollie's. I saw one. I was down south. I saw an Ollie's. Never seen one before. Didn't go in it though, so I don't know what they have. But the logo again, it's just some weird word art. I don't know. I could have made that myself. But Domo and Bill.com. I hate bills. Everyone, not only just the premise of paying bills, but typically people name Bill. Not very trustworthy. Bill Cosby, Bill Clinton, they're just not trustworthy guys. What can I say? Yeah, I don't know. And before open for Ida Big Lots, surprised they still are around. I am. I feel like last time I was in a Big Lots, it was just a trashy mess. But maybe that was just a specific location. Hibbett Sports in Boise. I don't recall cities ever reporting earnings before, but I'm curious what potato production looks like. That's what I got for you today. Have a good one.